War in the Middle East is sending oil prices up, defense contracts through the roof, and investors scrambling. But here's the thing. You don't need to follow every headline. I'm about to show you 3 ETFs that are quietly exploding because of this crisis, and a simple, lazy strategy to position yourself right now. Stay with me till the end, and I'll even show you a bonus insight into how savvy investors are really navigating this volatility. Tensions between Israel and Iran have escalated fast, with drone strikes, nuclear threats, and international powers weighing in. While the politics are messy, one thing is crystal clear. The markets are already reacting. Oil prices have spiked, defense stocks are climbing, and investors who know where to look are moving fast. So let's get straight to it. These are the 3 ETFs that are currently benefiting from the crisis and could continue to run if tensions escalate further. First up, XLE, the Energy Select Sector SPDR ETF. This ETF holds oil giants like ExxonMobil and Chevron. With Iran threatening key oil routes and global supply under pressure, oil prices are jumping. And when oil rises, XLE moves. It's one of the fastest ways to get broad exposure to the energy surge. Next is ITA, the iShares US Aerospace and Defense ETF. This one tracks companies like Lockheed Martin, Northrop Grumman, and Raytheon. With war on the table, defense budgets don't just increase, they explode. Contracts get renewed. Military production ramps up, and ITA lets you tap into that entire sector without picking individual stocks. Third, we've got GLD, the SPDR Gold Shares ETF. When there's fear in the market, money flows into gold. Always has, always will. And GLD gives you direct exposure to gold prices without needing to touch physical metal or mining stocks. Now here's the cheat code. You don't need to trade the headlines or guess the next military move. A simple split between these 3 ETFs, energy, defense, and gold, gives you strategic exposure to the 3 sectors that typically outperform during geopolitical crises. It's clean, passive, and low stress. But if you want to take it one step further, here's your bonus insight. Smart investors aren't just reacting to oil prices or defense stocks. They're watching how fear spreads across the entire market, especially in the volatility index, or what Wall Street calls the VIX. When the VIX spikes, it usually means panic is at a peak. And guess what? That's often when long-term buying opportunities quietly emerge. Instead of chasing headlines, some of the savviest investors are using spikes in fear as signals, not to trade fast, but to build positions in high-quality ETFs at a discount. That's a true investor mindset. Observe the panic, then move with patience. You don't need to watch the news every hour. You just need to understand where the money's going. And right now, it's flowing into energy, defense, and gold. ETFs like XLE, ITA, and GLD make it easy for lazy investors to ride those waves without overcomplicating the process. This video is for educational purposes only and not financial advice. Always do your own research before making any investment decisions. And while we focused on how markets react to global conflict, let's be clear. No financial gain ever justifies human suffering. War is never good. We hope peace prevails soon and lives are protected above all. If you appreciate simplified, thoughtful investment insights, hit that subscribe button, because while the world watches crisis, we stay focused on calm, clear, and quiet profits.